One of the key factors that could revive the energy sector in the EU is the increase in natural gas inventories. Natural gas inventories are the amount of natural gas stored underground in various facilities across the country. These inventories help balance the supply and demand of natural gas, especially during periods of high consumption or low production. According to the EU Energy Information Administration, EIA, EU, natural gas inventories have increased by 19% more than the 5-year average as of April 2023, and are expected to reach 4% more than the 5-year average by the end of October 2023. This means that the EU has a large and growing surplus of natural gas that can be used for various purposes, such as power generation, heating, industrial processes, and exports. The increase in natural gas inventories is mainly driven by two factors: strong production rates and mild weather. The EU has become the world's largest producer of natural gas, thanks to the development of shale gas resources and technological innovations. In 2023, the EIA estimates that EU natural gas production will average 97.6 billion cubic feet per day, BCF/d, a record high. On the other hand, the demand for natural gas has been weakened by a relatively mild winter and spring in key gas consumption regions, as well as a contraction in the EU manufacturing sector and a softening in liquefied natural gas, LNG, exports. The increase in natural gas inventories has several implications for the energy sector and the economy. First, it lowers the price of natural gas, making it more competitive and affordable for consumers and businesses. Second, it reduces the risk of supply disruptions or shortages, enhancing the reliability and security of the energy system. Third, it creates opportunities for expanding domestic and international markets for natural gas, especially as more countries seek to transition to cleaner energy sources. In conclusion, EU natural gas inventories have increased by 19% more than the 5-year average as of April 2023, and are expected to reach 4% more than the 5-year average by the end of October 2023. This is a positive sign for the energy sector, as it indicates a robust supply and a potential for growth in demand for natural gas. The increase in EU natural gas inventories reflects several factors that have affected the supply and demand balance of the domestic gas market. One of these factors is the strong production rates of natural gas, which have reached record highs in early 2023. According to the EU Energy Information Administration, EIA, natural gas production averaged 97.9 billion cubic feet per day, BCF/d, in April 2023, up 2.4% from March 2023 and 6.8% from April 2022. Another factor is the mild weather that has reduced the demand for natural gas for heating and cooling purposes. The EIA reports that the winter of 2022 to 2023 was 11% warmer than normal, and the spring of 2023 was also relatively mild in key gas consumption regions. As a result, natural gas consumption declined by 1.9% in April 2023 compared with April 2022, mainly driven by a 9.7% drop in residential and commercial sector consumption. A third factor is the weak demand from the industrial sector, which has been affected by the contraction of the EU manufacturing activity for 6 consecutive months as of May 2023. The EIA estimates that industrial sector consumption of natural gas decreased by 0.6% in April 2023 compared with April 2022. The slowdown in the industrial sector has also contributed to lower electricity generation from natural gas-fired power plants, which decreased by 1.4% in April 2023 compared with April 2022. A fourth factor is the softening of liquefied natural gas, LNG, exports, which have been facing lower global prices and weaker demand due to the COVID-19 pandemic and its impact on economic activity and energy consumption. The EIA reports that LNG exports averaged 10.8 billion cubic feet per day in April 2023, down 0.7 billion cubic feet per day from March 2023 and 1.5 billion cubic feet per day from April 2022. LNG exports have also been affected by some maintenance issues and outages at several LNG terminals in recent months. These factors have led to a surplus of natural gas in storage compared with historical averages, which has put downward pressure on natural gas prices. The EIA forecasts that natural gas inventories will increase by 1,648 billion cubic feet from the end of April to reach 3,762 billion cubic feet at the end of October, 4% more than the 5-year average. The EIA also expects natural gas prices to average $2.78 per million British thermal units, MMBTU, in 2023, down from $3.13 per MMBTU in 2022. One of the main factors that has affected the natural gas market this year is the high level of inventories. According to the Energy Information Administration, EIA, at the end of April, natural gas storage inventories totaled 2,114 billion cubic feet, BCF, 19% more than the 5-year, 2018 to 2022, average. The EIA forecasts that natural gas inventories will increase by 1,648 billion cubic feet from the end of April to reach 3,762 billion cubic feet at the end of October, 4% more than the 5-year average. This inventory surplus has caused natural gas prices to drop by 47% year-to-date, to around $2.350 per million British thermal units. The low prices have reduced the profitability and competitiveness of natural gas producers, especially in comparison with renewable energy sources. Some analysts expect that low natural gas prices will lead to lower production and higher demand in the coming months, which could help balance the market and support prices. However, the implications of low natural gas prices are not only limited to the energy sector. Natural gas is also a key input for many industries, such as chemicals, fertilizers, plastics, and steel. Lower natural gas costs can benefit these industries by lowering their production costs and increasing their margins. Moreover, natural gas is also a major source of electricity generation in the EU, accounting for about 40% of the total in 2022. Lower natural gas prices can translate into lower electricity bills for consumers and businesses, which can stimulate economic activity and spending. Therefore, the inventory surplus and price drop of natural gas have both positive and negative effects on different sectors of the economy. The net impact will depend on how long the surplus persists and how quickly the market adjusts to changing supply and demand conditions.